Rob Shaker from Shaker Financial Services. Your closed-end fund trading strategy consistently beats the market. Can you explain it?
Yes, what we like to do is we create modeled portfolios, globally diversified, and what we do is by trading closed-end funds, we do something called discount capture, in which we buy funds when they're undervalued, their discounts are artificially wide, rotate out of them when they become more narrow. Thereby we'll get the general flow of the portfolio plus all the discount capture additives.
Well, there's a lot of different closed-end funds out there. There's stock and bond. What kind of funds do you look for?
Well, we like to keep a standard mix, typically around 60% equity, 40% bonds. But then within that, what we're looking for is on a daily basis, any stock that is artificially wide. Typically, we'll look for groups sometimes that are wide. Currently, the senior loans seem to be pretty wide, so we're looking at FRA, FRB, VVR in that area. After the carnage that occurred on August 8th with some widenings, we still have some large caps that we've liked recently, ZWAG Fund and USA as well.
Well, your strategy involves a lot of trading. Typically, this scares some investors. Can you tell me about how you deal with that?
Yeah, I think there's a common misconception that just because you actively trade that you're somehow riskier as opposed to a buy and hold person. When it comes to closed-end funds, you really are dealing with two basic risks, the NAV appreciation or depreciation, and a widening because of discounts. By trading actively, if we're doing our job correctly, we are taking out that discount risk. So it's actually less risky as long as we maintain the same risk on the NAV as we go along.
Well, not only do you trade actively, you also look for activist situations. Can you explain that?
Yes, certain funds will trade at a very wide discount, and activists will get on board and try and convince the fund to take some sort of action that would narrow the discount. And that's a benefit to anyone who's holding it at the time. So there's sort of two stages there. You can have an activist who is, you can invest with the fund, hoping the activist gets something done. And then once it's done, there's actually a second stage. That's where we are currently on most of the things. For example, if they're going to open end, now all of a sudden you have a great arbitrage where you know you're going to capture 4 discount points if you hold it till December. So currently FGF, FGI, we're doing that with and TYW as well.
Thanks a lot.
Thank you, it's a pleasure.